So why don't people trade more? I personally do more 85% investing and 15% trading. There's always a deal to be made in cryptocurrency, but I do like staying in for the long term. So why don't more people trade? Well, essentially because it's got a higher burn risk. If you don't get out at the right time, you essentially can get massively burned. You could lose the money that you put into the trade just like that. If you put 1,000 in, you could lose 500 literally in the space of, half a day, sometimes even a few hours, depending on how volatile the cryptocurrency is. There's more frustration. So although I say there's less emotion, you don't get emotionally involved. With trading, a lot of people actually find themselves in a 50-50 situation, which is that 50% of the time they make great gains. 50% of the other time they make losses, and basically they balance each other out, so it can be quite frustrating. One day you can essentially make a lot of money on a trade and feel like the smartest person in the world, the luckiest person in the world. You can feel on top of the world, and then the next day you feel like rubbish. You literally hate yourself, you hate the cryptocurrency, you hate the industry, you hate everything. Okay, so there can be frustration. You can get frustrated as to why is that happening? Why when I get involved in it does it suddenly lose value? Yet in the last 10 minutes it's been increasing in value. Why? So there can be a lot of frustration, and that comes with the burn risk. Constant attention is required. In long-term investing, like with investing in stocks and shares, you make the decision, you do the analysis, you then invest in the cryptocurrency, and you just leave your money vested until it matures, until you get the multipliers. With trading, you can't do that. When you put the money in, you've got to be constantly watching for the exit point. Okay, you've got to be watching, right, this is the point I want to leave, and you've got to wait for it to hit that point, and then suddenly the value can go down and it can go up, and then it doesn't hit that profit point, and then you've got to just be paying attention all the time. If you go off for 3 hours, let's say you go on a business meeting, or let's say you go on a trip with your family, you can come back and essentially the cryptocurrency could have completely tanked in that time, and you could have lost a lot. So it requires constant attention. It can be quite a headache. There's a lot of pressure on you to keep track of the price. The market and the outcome is very, very unpredictable. No matter how much technical analysis you do, no matter what experience you've got in making profits in similar circumstances before, a lot of that goes out of the window because every trade is different and you can't predict how the rest of the market are going to react. Okay? This has happened to me once before, where in 9 out of 10 cases, when there's a bit of market news that comes out about a cryptocurrency that is going to impact on that cryptocurrency in a week's time, you put your money in, and normally over the next 3 or 4 days, you make a good profit. Okay, the cryptocurrency normally rises in value, and then just towards the actual date, it plummets. However, 1 out of 10 times, it literally plummets the moment you put your investment in, and that's simply because people don't necessarily have the demand. The demand isn't necessarily there for the cryptocurrency at the point that you put your money in, and bang, you've lost your money. And you can't predict it. You can't control it. It's literally out of your hands, and that can be very, very frustrating, and it can lead to you being burnt in a trade. Technical analysis is required. Okay, so with long-term investing, you literally can have some criteria. What pain does it solve? How scalable is that pain? How unique is the cryptocurrency? Because that allows it to have a good first mover advantage. How good are the team? What's the coin supply? What are the rewards? All of these things contribute to the long-term potential of a coin. But with short-term trading, you need to be doing technical analysis. You need to be spotting the points at which a cryptocurrency is about to soar. You have to be constantly keeping an eye on the markets and make sure that you don't get burnt in the whole experience. So that's why people don't trade. It's because it's so unpredictable. And if you don't leave at the right time, you can get horribly burnt. That's what's happened to a lot of people that I have taught, a lot of people that I know in the community, even the experts and the whale investors. And when I say whale investors, the people that hold a large proportion of a cryptocurrency in a particular market. These people, they all get burnt. It's easy to get burnt. This is not a foolproof system. No one is bulletproof. No one, not even the experts. So the technical expertise required of you is going to be absolutely pivotal, hence why there is a good technical analysis piece on this course. So that's why people don't day trade more. And I hope that's helped, and I'll see you in the next lecture.